Welcome to The Explainer. You know, the crypto market right now feels like a real battleground. On one hand, the short-term charts are absolutely screaming for a relief rally, and it's super tempting to jump in. But when you zoom out, a much more dangerous picture starts to emerge. So what is this? A golden opportunity to buy the dip or a carefully laid trap? Let's break it all down.
And that really is the million-dollar question every trader is asking right now, isn't it? Is this little price bounce the start of a real, sustainable recovery? Or is it a classic bull trap, the kind designed to lure you in right before the floor completely drops out? That's the tension we're all feeling in the market.
All right, so first, let's look at the optimistic side of things. We're going to zoom way in, focus on those shorter time frames, because that's where a pretty compelling case is building for at least a temporary bounce. So here's the deal. On these shorter time frames, the market is flashing oversold. The best way to think about it is like a rubber band. You stretch it, and eventually it's got to snap back a little, right? Well, after such a sharp drop, a lot of key indicators are suggesting we're right at that snapping point.
And if you look at the specific evidence, it gets really interesting. The daily RSI, that's a key momentum indicator. It's deep in oversold territory. But get this, the 3-day RSI is oversold for the first time in over 3 years. That's a huge signal. Plus, on the 6-hour chart, we have what's called a confirmed bullish divergence. It's kind of like a car that's rolling downhill, but you can see the driver is starting to tap the brakes. The car is still going down, but that downward momentum is fading. That's what a bullish divergence is. It's a sign that the selling is running out of gas.
But this is where we need to pump the brakes a little bit ourselves. This quote really frames it perfectly. Yeah, all these signs point to some short-term bullish relief. But, and this is a big but, it doesn't necessarily mean we've hit the bottom of this bigger move down. And that leads us to the other, much scarier side of this story. See, that little glimmer of hope on the short-term charts might be hiding a much bigger problem. Because when we zoom out from the day-to-day noise and look at the weekly chart, well, the story completely flips. It goes from hopeful to pretty cautionary. And what we see on that weekly time frame is a massive warning signal that's been building for over a month. It's a major bearish divergence. So this is the exact opposite of what we were just talking about. Here, the price was grinding higher, but the momentum was actually getting weaker and weaker. It's a classic sign that the underlying strength of the trend is fading, big time.
And this slide just lays out that conflict perfectly. From the short-term view, things look oversold, ready for a bounce. But from the long-term view, you see these huge signs of weakness pointing to more downside. It's kind of wild, right? It's a perfect example of how two completely opposite ideas can be true at the exact same time in the market, all depending on your perspective.
So, how on earth do we make sense of this? How can a short-term bounce fit inside of a bigger long-term decline? Well, it turns out they're not contradictory at all. In fact, they're actually part of the same predicted sequence of events.
Okay, so here's how this is likely to play out. First, we get that short-term bounce we've been talking about. That relieves all that immediate oversold pressure. Then, step 2, this bounce effectively resets the momentum indicators, moving them out of the danger zone. And here's the kicker. That reset ironically creates more room for the price to fall even further later on. So that little relief rally, it's actually the very thing that could enable the next big leg down.
All right, let's get specific and put some numbers on this. The critical support level everyone's watching for Bitcoin is right around $85,000 to $86,000. That's the line in the sand. If we get a bounce from there, it's likely going to hit a wall of sellers around $92,000 to $94,000. But if that support fails, the trapdoor opens, and the next logical stop is way down in that $75,000 to $76,000 range.
And please, don't make the mistake of thinking this is just a Bitcoin story. It's not. Bitcoin is the leader of the pack, right? And where it goes, the altcoins almost always follow. We're seeing this exact same dangerous pattern, this potential relief rally inside of a bigger downtrend playing out all across the board. Let's just take a quick look at Ethereum. It's following Bitcoin's script almost perfectly, flashing the exact same kinds of signals on its chart.
For Ethereum, it is pretty much a carbon copy. The daily RSI is oversold, which is why we're seeing this little pause right around that $2,600 support level. Now, any bounce from here is going to face a huge test between $3,000 and $3,100. But if $2,600 gives way, the path down to $2,200 looks very clear.
And now let's look at Chainlink. It's the same story, really, but maybe with an even clearer signal. Its daily RSI just hit an oversold reading for the first time in months, which makes a little pop from these levels almost a textbook expectation. Chainlink followed that script perfectly, didn't it?
It bounced right off that key support at 1160. The big challenge now for any rally is going to be pushing through that resistance between 1280 and 1330. But you got to remember the theme here. Even with a probable bounce, the bigger trend is still firmly in the bear's control. So, after all that, after looking at these charts, these conflicting signals, what's the one thing you really need to remember? Let's distill this whole thing down.
Okay, here's the bottom line. Number 1, a lot of short-term signals are screaming for a bounce. Number 2, this bounce is very likely just a temporary break. It is not a signal that the bottom is in. Number 3, those all-important long-term weekly charts still look very, very bearish. And number 4, this whole pattern is happening market-wide from Bitcoin all the way down.
You know, I want to end with this powerful quote from the source material because it just sums everything up so perfectly. Don't be fooled by short-term bounces from these points of support. It's just a crystal clear warning not to mistake a temporary break for a full-blown reversal. So, I guess that leaves us with one final thought. In a market this confusing, with so many signals pointing in different directions, it all comes down to a simple question. Are you watching the short-term waves crashing on the shore, or are you paying attention to the tide? Thanks for joining us.